Bill, welcome. Thanks for giving us part of your Thursday morning. I wanted to dive into, well, first and foremost, let's talk about inventories in the crude. Yesterday, we saw a small draw. What was it? Down 1.6. They were looking for about down 2.3, but it doesn't seem like the inventories levels have been a major driving force. It seems like the focus is more on, well, you could say the dollar and some of the hurricanes, some of the storms that we've been seeing. There have been a few of them, to say the least.
Yes, as well as the potential damage due to lockdowns if demand overall gets hurt. I mean, you're seeing UK increase in restrictions. However, actually, some data out of UK said retail gasoline demand was up over the past month or two. So, overall, I think that report yesterday should have helped the market, helped support the market a little bit. API the night before set a bar with a big draw. I think it's about 7 million from API on Tuesday night for gasoline, which helped the market move up a bit. But focus on gasoline for a second. There is another big draw yesterday for the EIA confirmed 4 million, not the 7 million. So I think that's why the market didn't run away. But year over year, gasoline stocks are actually in a deficit. So keep that in mind right now. Watch gasoline coming out of the summer season and where that is. But we're also not refining as much crude. So that does help crude build up those inventories. If the dollar strengthens, though, as you mentioned, if the dollar strengthens, that does decrease demand for U.S. crude. So because overseas they can purchase less. So I think we're at an inflection point as crude is tethered to that $40 mark.
Okay, let's talk about the dollar again. I'll get into that a little bit more, but I'm curious, how much of an impact have we been hearing from storms? I read it was only the second time National Weather Service has actually had to revert to using Greek letters after kind of working their way through the list of storm names. I mean, obviously, the frequency ultimately impacts them. The severity is a big deal as well, but this has an impact on demand. It has an impact on production as well.
You're right. I mean, I think it's two sides of the coin. I mean, if these storms come through, if you see them go up through the East Coast pretty heavily, the demand is going to get hit as well. So I'm not too concerned. I mean, nothing has really come out there. I mean, other than Laura and the other, there was the 1-2 punch a few weeks back. But I think you got to keep an ear to the ground. You got to be ready for it. You have to have that in your risk management strategy. One of the things coming into this week more with crude rather than the storms was those comments from OPEC I was focused on. And I've been on the show a few times saying I want to be a buyer at $35 and you're $36. We got down there and the market responded. I think it ran up very, very strongly through the past week, and OPEC helped push it up. But I actually positioned short with some put spreads into this week on those comments as we moved into near $41. I'm actually getting out of those positions today. I just think that we're not following through right now for the downside. We may, but I don't want to lose money on the trade overall. That's something that's worked somewhat well. So I think we could go either way, but I am worried with those comments from OPEC. I think they're alluding to some concern that there's either under compliance or really both the IEA and OPEC last week were very worried about the demand picture moving in through 2021. So I am concerned. Still, I think the tremendous amount of value down in the $35 region and that's where you want to be a buyer.
Bill, talk to me because it sounds like a lot of fundamentals at play here right now, but for the most part balancing because the price has been holding around, well, it's been range bound, 35 to 45. You could go all the way back to, we just took a look a second ago at the 50-day moving average back to the beginning of June. Anything specific in those OPEC comments that raised any eyebrows? I mean, again, I'm talking balance here in terms of price activity, so I guess there wasn't any major disruption.
Well, I think the fact that the Saudi oil minister really came out that he used some pretty strong words that he wants to basically crush any short sellers in the market. I think the only reason he's coming out with those is because he's trying to really masquerade what other situation there may be fundamentally. So again, that's pure speculation. That's why I put on some put spreads late last week and was able to capitalize a bit. And overall, but I don't see the follow through. I don't see this market really going lower for a reason other than overall risk sentiment. 38.55, 38.80 area has proven to be a big support coming into this week, and the market's responded a few times there. Last night we were nearly $39 and we're back up $1. So I'm just, I actually cut those positions right before coming on the show. I'm going to watch crude here, watch a few rounds before jumping back in the ring.
Does that mean that you don't feel like this dollar strength that we've been seeing has legs here at this point? I mean, that is definitely one of the contributing factors to some of the weakness we've been seeing in crude and some of the sell side activity.
Great question, because I'm smiling here because actually another position I've been playing the dollar. Great bottoming pattern in the last few weeks, and ultimately it's hit up here to the upside targets I wanted to see. 94.5 was the first upside target. Just in front of about 94.70, and then really the high end that we could see is near 96. But you know what? I think I'm just taking a very cautious approach. We're getting closer to the election. I don't want to be stuck in positions for the longer term. I don't day trade. I really look intermediate term. I'm looking where's the next 3 to 5%. But I don't want to be greedy here because, again, I don't want to be stuck in positions about they're almost 30 days out from the election and then have to maneuver in front of that. So I'm keeping a little bit of a shorter leash on things, and I took all the currency positions off as well this morning with clients I'm working with and what the accounts that I'm managing. So overall, I do think the dollar could go higher, but I wouldn't push it at these levels, and it's been a very nice bottoming pattern that has played out already.
Bill, how about natural gas? We saw some major price swings over the last few days, a major day in terms of volatility, upside movement yesterday. What are we seeing in terms of catalysts here for some of the recent price activity, and what do you have your eye on in terms of levels that you're watching?
Well, that November contract's up at 280, so it looks like the October is trying to cover some of that gap as options expiration is tomorrow. You got some big open interest at the 250 strike. Maybe we make it up to there. Big is a big flush out. There was a lot of longs that got hit hard and damaged there. So that flush out happened, and now we're coming back and looking to sort of cover that roll gap. I've seen these things before in this time of year through their first quarter next year, where these rolls into the options expiration really could get ugly. I mean, I wouldn't be surprised to see this thing go up to 260 or 270. I'm not sitting here planning on that, but I think if you're playing natural gas, this thing could run a bit. Again, I think the momentum's the upside, but it could quickly stall out too because of 250 being that round number. Got some open interest in that area of options expiration today. I favor that seeing some more strength, but I think you got to be very cautious with it too.
Bill, is this price activity? You said you've seen this before, somewhat seasonal, indicative of the shifts that we're going into out of summer into winter, and ultimately, you get those cold snaps that kind of spark. Hey, are we going to see an early winter, a colder winter than normal? Oftentimes, that brings about some of that narrative, that conversation. Is this what you'd expect to see as we start to kind of move our way out of some of those builds and into some of those draws eventually?
Yeah, absolutely. I mean, you have the big price gap from month to month, so cash is moving accordingly. Something to see here, and that's why they call it the Widowmaker in March-April spread. So you get these massive moves in through the rolls and through the expiration. So you got to tread lightly. Use your stops. You're trading natural gas. There's a number of different contract sizes, or 2 different contract sizes: the full one, and you got the micros or the minis. To be able to manage your position. Options are also great. Just know what you're risking out there, because these things can move pretty sharply.